All right, welcome everyone. Welcome to the show. Welcome to the CoinRock Show. We will get going in a few moments here. Should be good to go here. And I can see that we are live. Welcome. We will be joined by a guest in about, they changed the, this is interesting. They changed the look of the dashboard here. Interesting. Okay. Improvements, hopefully. We use StreamYard to stream this. So we will be joined by a guest in about 25 minutes. Let's push this out and share this in all the groups. We'll give it a few minutes here. The team, you can push this out. And then we'll talk about the bubbles. Look at them. Look at the bubbles here. Mainly all green today. So that is a positive. We should be good. I can see the team typing here. Very good. All right. Yep. We're good to go. Let's push this out to the groups. Share this, like this, comment, say hi. And we'll do a quick recap of the news here on what's happening. And then, where are we here? And then we will be joined by Kilian today, talking all things Bitcoin, including a lot of stuff that, you probably don't know. And to be very honest with you guys, there's a lot of things that I think I'm going to learn too today, because crypto is such a massive universe in itself, right? So there's so many different pockets and different areas and narratives and even the fundamentals, which is really what we'll get into today when it comes to Bitcoin. So many interesting things being done by everyone in the industry, and it's just interesting to see the team. Yeah, you can push this out here. It's interesting to see the updates when it comes to the improvements and also the creativity from people building when it comes to crypto, whether it's on ETH, on Solana. Of course, a lot of building happening over the last 2 years now, a year and a half, 2 years. Actually, when Solana started ripping from, what was it, $8, $9, it was, it's one where it was due to the amount of building. And so it's going to be interesting to see how ETH does. There's a lot of updates here on the ETH building side. And today we'll talk specifically about Bitcoin. So decentralization, privacy, Bitcoin. And so that'll be in about 20 minutes. Welcome to everyone here. Let's have a look at some of the comments here in the groups. Okay. Good. So the guest will be on in about 20 minutes. Welcome everyone. If you're here to FUD or to drop negativity, you'll get banned. So we'll just ban you here. I have no patience for anything here. We come on, we do these shows. So if you want to join, you're welcome. But at the same time, keep it positive. So where are we here? All right. We had two very interesting guests last week when it comes to what is this? Oh my God. Yeah, we'll ban this here. All right, let's I don't know if the team can do this. If not, I'm gonna ban it myself. I have no interest in seeing this. This is not the place to come and FUD. So use. Should be good now. If you have something, if you work for one of our projects, reach out to the manager directly. This is not the time. When I'm live, I definitely do not want to deal with this. So, with that being said, let's have a look here. And let's cover some of the articles here that we have on the market news. So welcome everyone. We will be on in about 20 minutes with the guests. We'll talk, we have Kilian joining. We'll be talking all things Bitcoin, things honestly that I will be asking for the audience, but also for myself, because there's so much stuff happening, like I said, on the building side. We have a lot of news here when it comes to crypto in the last 3 days. Number one being this news just dropped here. This is huge when it comes to stable coins. Talked a lot about stable coins this year on the episode, on the shows. Even just like in person, you know, when we have meetings and get-togethers, IRL. One of the main topics that comes up is the topic of stable coins. It is one of the drivers this cycle. Very interesting, because it wasn't a big, or it wasn't as big a deal in the previous cycle, and this is very interesting. This just happened today. Senate advances Genius Act as Democrats drop opposition. So, as you guys know, in the U.S., there's always this war, this fight between Republicans and Democrats. So Democrats were notoriously anti-crypto, and Republicans were, of course, more pro-crypto. Of course, there's always pockets that are in each side, each camp that are pro, so against the majority. But generally, in the previous in the Biden administration, it was very much anti-crypto, right? Elizabeth Warren, very anti-crypto. And now, of course, with the Trump administration, it was a very, it's a massive shift to the pro-crypto stance. So what's interesting with these politicians is you would expect them to do what's best for the country, the industry, their citizens, but unfortunately, of course, that's a nice fairy tale, because that's not the case. That's not what happens when it comes to the way they vote. It usually, I think one of the best political shows, I think everyone should watch, House of Cards. Yeah, Kevin Spacey. The first few seasons are pretty amazing. So this is interesting, because it's not easy to get both sides, of course, to agree on something, especially when it comes to new technology. Senate advanced the Genius Act as Democrats drop opposition. The U.S. Senate has officially advanced the Genius Act, a landmark bill aimed at regulating stablecoins. So this is when the new SEC came in a few months ago. One of the main topics was, stablecoins. Was really about regulating stablecoins, giving clarity what can be a stablecoin, what cannot be a stablecoin, what do stablecoins need to do to be accepted and used on and recognized, but also what is a no-no. For example, are stablecoins. So of course, in the previous cycle, one of the major catastrophes was the Luna USD drop. So, is an algorithmic stablecoin something that let me put you guys in the middle here. Is an algorithmic stablecoin something good or bad? Again, all these things are things that we're up to, that need to be defined and regulated. So overall, this is huge progress for the industry. This will give clarity. I haven't had time to look into the details of this yet, but this is something that you definitely want to see when you look at the market as a whole, because there is so much money going through stablecoins. And after this, we'll just go through the Tether update here. So the Guiding and Establishing National Innovation, etc., Stablecoins Act. The Genius Act, previously stalled after several Democratic senators objected to provisions they claimed would indirectly benefit former President Trump and his ventures. So again, this was in limbo for a while, and it passed today. So this is extremely interesting because it's progress, right? This is this paves the way for regulation coming in, the framework that everyone's waiting for in the industry, which is coming probably August, September is what I'm hearing from my sources. The full-on framework for crypto for the industry. So within that batch of announcements and updates and clarifications is, of course, the stablecoin side of things. So this is, of course, very interesting because we're at the end of May here, so we're about 3-4 months away from the full. Hopefully, they don't push it back too much. But let's say August, September, having the full crypto framework will give a lot of. First of all, we talked about this a lot with guests, right? Especially those who are more on the institutional side and deal directly with institutions. And you guys know this. I hope you join as many shows as possible, because we do them to share. We it's really an educational venture here, to share this, to be to bring these guests and interesting conversations to everyone online. One of the things, of course, as you guys know, is when it comes to funds, pension funds, banks, investment funds, and firms, they need clarity. They need clear frameworks, because when they come in and deploy, they have, of course, investors. They need to satisfy, of course, that they need to communicate clearly with, and so for them to communicate clearly, they need, of course, clear frameworks. And it takes anywhere between 6 to 24 months for these big funds to come in and buy, whether it's Bitcoin, whether it's ETFs even. And so this is basically the first step towards having a lot more clarity in the industry. I think by the end of this year, by the end of 2025, we should have the bulk. I mean, the US at least, because other countries, other regions have already very clear frameworks. But of course, we're talking about the US. We talked about this last week with, I believe it was with Alex on the show. It talked about the fact that everyone follows the US, right? The EU looks at the US to see how they are going to regulate things. Of course, doesn't mean that they copy everything. Sometimes they should, sometimes they shouldn't. In this case, for crypto, I think EU laws are not going in the right direction when it comes to digital currencies, digital assets, but we'll see how that evolves. Of course, things can move very quickly. It only takes a few people in power to push those conversations or come up and get bills passed that previously were blocked. So we'll see. Of course, one of the biggest crypto bears and troublemakers was and is Elizabeth Warren, extremely vocal in building an anti-crypto army. Like, openly, that's what she did for the last few years. And so right now, this is going to be an ongoing conversation, right? Because there's, of course, money in being against things. You have to understand that everything when it comes to politics is driven by money. And so as long as there's lobbying against a decision or against something in motion, there will be money to be made, and politicians will either take that money or they will take the other side. So we'll see. I think that this is very bullish for the industry. It's really step one. And talking about stablecoins, this is a huge update for Tether. So as you guys know, we've talked about US treasuries and U.S. markets a lot when it comes to the macro, with amazing guests over the last few months. This is interesting because Tether overtakes Germany as a top U.S. Treasury holder. So let's think about this for a moment, right? So the buyer, the usual buyer of treasuries, right, of U.S. treasuries, were countries. Now we have Tether that has officially surpassed Germany in U.S. Treasury holdings, cementing its place as a significant player in global finance. With more than $120 billion in treasury bills under management, the world's leading stablecoin issuer now ranks 19th globally. So think about that. A non-country, right, in an industry that for years was the kind of like the ugly duckling of in finance, right, now is the 19th biggest holder of U.S. treasuries. So, and there's been so much FUD over the years about Tether. I'm very bullish on Tether just because even if you don't like Tether going down and Tether having, a let's call it a problem, to be polite, is the last thing you want to see in crypto. If Tether goes down, your bags are dead, basically, right? So let's just keep things in perspective here. You want Tether to do well. So this is very bullish for Tether, of course, because it, first of all, it gives institutional investors a kind of almost like a view on how are these non-TradFi entities like Tether able to be in the top 20 of U.S. treasury holders, right? So it's in a way it's free advertising, not free because it costs them $120 billion, but it's one of the benefits of this is countries looking at this saying, oh, Tether might not be bad after all. Let's see how this plays out. Remember, Europe effectively banned Tether. And this is coming, I believe, in May or June. There's so many things happening that sometimes I forget the dates, but it's probably in Q2, if I remember correctly, with MiCA. So it's either the main governing body in the EU when it comes to digital assets or to, in the financial space, effectively banning Tether, which means that if that goes through, of course, I mean, that's definitely something that we talked about this a few times, right? It means that Tether would effectively be delisted by many European or maybe even all centralized exchanges. So, if and when that happens, I mean, I believe it's already been decided. If and when that happens, we'll definitely have news about that. Overall, so this is interesting, right? So by backing its $151 billion USDT stablecoin with a mix of highly liquid assets, including US treasuries, Tether has demonstrated resilience in the face of crypto market volatility. Germany held $111 billion, now trails the stablecoin issuer. So interesting to see that Germany, basically the number one economic power in Europe, is now behind Tether in terms of holding US Treasury bills. So Tether was the 7th largest buyer of US Treasuries in 2024. This is very, very, very interesting. Number one, Cayman Islands. Number two, France. You can't see this. This is too small, but it's in the article on CoinRock Media. France, Luxembourg, Belgium, Singapore, United Kingdom, and Tether buying $33 billion in 2024. So again, this is interesting. I'm happy that we have this section. Good job, CoinRock Media team. I literally just wanted to say this about this coincides perfectly, although there are no coincidences at this level in business, with the Genius Act. As stablecoin regulation gains momentum in the US, Tether could be poised for even greater growth, especially if new laws help legitimize and expand the use of dollar-backed digital currencies. So this is yet another bullish signal and another vote of confidence that digital assets are here to stay, especially with Tether going through so much. Talk about an entity that's been battle tested over years and cycles, and DPEGs and FUDs and fear and rumors and everything you can imagine, and they're still here. So this is very bullish for the industry, and hopefully it silences some of the FUD. And talking about FUD here, Coinbase. If you guys haven't seen this over the last few days, this is pretty big in the industry. Very, very, very disappointing. The way. So for those who don't know, before we get into the disappointment, Coinbase is now, of course, facing legal issues and lawsuits when it comes to all the leaks. So phone numbers, crypto balances, IP addresses were leaked, and this was apparently in one of the customer support outside, so offshore, outside of the US. At least 6 lawsuits have been filed against the crypto exchange in the last few days, marking a swift and coordinated legal response from affected users. Customer support agents at Coinbase were bribed to leak sensitive user data. This is catastrophic. This is catastrophic. You guys know I'm not bullish Coinbase. Coinbase, of course, let's be real. Coinbase is the U.S. government's crypto entity. That's how I see it. That's how many of us in crypto see it. They work directly with the government when it comes to seizing and releasing crypto, which is good. That being said, this is yet another blunder when it comes to customer service, customer leaks in this case. So the story is that, so let's have a look here. Lawsuits allege that Coinbase failed to enforce adequate security protocols and mishandled the fallout from the breach. So let's say you have a Coinbase account. Customer support agents outside of the US, and this comes back to Coinbase outsourcing customer support offshore, basically, outside of the US. Look, customer support outside of the US is cheaper than in the US. Simple as that. They maybe have different decision-making points, but the reality is it is much cheaper to have a customer support agent outside of the US. Coinbase now faces lawsuits over alleged breaches of Illinois biometric. I didn't know this. Illinois biometric privacy law. A group of Coinbase users from Illinois have filed a class action lawsuit against the crypto exchange, alleging that its identity checks violates the Biometric Information Privacy Act. So this is not good, but this is very warranted. When someone trusts you, when users trust a publicly listed company that has a fiduciary obligation to do the right thing and to protect users, and you see that extremely sensitive information, I know it was IP addresses, I know it was, let's have a look at this. In a May 15 disclosure, Coinbase confirmed the cyber criminals had bribed customer support agents to access internal systems and extract user information, sensitive user information. The breach compromised data such as full names, email addresses, physical addresses, phone numbers, social security number. I don't think they were full, but at least partial, bank account details, government issued IDs, and even snapshots of user balances and transaction history. That is fucking horrendous. Horrendous. If you have a Coinbase account and you did the right thing, you KYC'd, you used your passport, your real physical address, social security number, and everything is leaked. By the way, if it's leaked, there's no unleaking it, right? I mean, it's done. It's gone. And so this is very bad. It's very bad because there will be a series of new, this has been happening for years, right? Of new phishing attempts, of new threats towards people who KYC'd. And so this brings us to, this is actually something I think we'll discuss on today's show, which is the value of KYC. Is KYC overrated in the wake of the Coinbase breach? So with that being said, we'll take a quick 5-minute break and we will welcome our guest for today. Today, we're talking to Kilian, all things Bitcoin. So if you are here, welcome to the show. We will now take a quick break, quick 5-minute break, and we will welcome Kilian in about 5 minutes, talk about Bitcoin. We'll learn things. I'm going to learn things, seeing what they are up to and his perspective on the market. Always interesting to see what other people think, even if you don't agree with them. One thing I always say is, if you're bullish, you need to know the bear case. If you're bearish, you need to know the bull case. You need to know what's happening. Doesn't mean you need to agree with everyone, but it's always good to have different perspectives, and then you make your own mind. So with that being said, we'll take a quick break, and we'll be back in 5 minutes for today's guest. Hey, Matthias here, and if you're enjoying this and want access to even more alpha, early stage deals and opportunities, and also behind the scenes insights on the markets, hit the link in the description and make sure you're subscribed. It's free and it puts you ahead of the curve. Let's get back to the show. Welcome to the show.
Thank you. Thank you for inviting me. Excited to be here.
Yeah, let me just put you on the big screen and we'll get going. I'm very excited for today's show. Got a bunch of DMs too from our different groups, because Bitcoin is something that everyone thinks they know, but I think you know it better than most. And I think one of the main topics today, of course, going into like your story and everything, but I have a lot of questions actually from people when it comes to several things that I think people are almost too afraid to ask. And so I'm going to be the voice of the market and asking you these questions about Bitcoin, all things Bitcoin.
Perfect. Hit me.
Quick I'll just read the intro, and then I really want you to introduce yourself, because I want you to, we want the guest to tell the story the way, because we always miss things, of course. But Kilian is the CEO and co-founder of Boltz, a non-custodial Bitcoin exchange leveraging the Lightning and Liquid networks. You've previously worked on decentralized exchange infrastructure at OpenDEX and served as product lead at BTCC, one of the earliest crypto exchanges, and work a lot at the intersection of Bitcoin UX, privacy, and cross-chain interoperability. That's the quick summary, but the floor is yours. Go ahead, tell everyone who is Kilian and what does Kilian do?
Well, the intro sounds about right. So maybe I start with how I actually got into Bitcoin. So with me, actually, it was not getting into crypto or like digital assets. It was actually getting into Bitcoin, and it started back in end of 2015, beginning of 2016 in China. So I stumbled, it was accidental more than planned, into Samson Mao in Shanghai back then. And he convinced me that it's a good idea to start working for BTCC, for BTC China back then. So I went to the office a couple of days later, and I think a week later, I started working as a product manager of a Bitcoin mining pool without a clue what Bitcoin was about.
What year was this?
That was 2016, I think, February 2016. So right when, as a reminder, when China was basically the place to be, right? So China was the number one place of Bitcoin mining. All top three exchanges back then, OKCoin, BTCC, and Huobi were all Chinese. So it was really the place to be. I just had no idea about this. So that's how I got into Bitcoin. Basically being thrown into cold water, learning to swim somehow. But it was very exciting. It was, I couldn't imagine a better place to be. I got to visit mining farms in the Sichuan province in China. I still remember doing a documentary with some guys from TechCrunch, nice. Flying drones and doing this footage for how mining works in China. It was very exciting. And then I started shifting a little bit more towards the product manager kind of side, and started with a new mobile wallet. And that got me really interested in the UX, like building a Bitcoin product with good UX. And the main idea of the wallet was basically send Bitcoin to a phone number instead of Bitcoin addresses. Make it easy for people. It was fully custodial back then. I developed my technical understanding of Bitcoin over the years. So back then, I was really focused on the UX kind of things. And then around 2017, end of 2017, beginning of 18, I changed to a new company, and they let me run what was later turning into OpenDEX, basically the attempt to build a real decentralized exchange on the Lightning Network. And back then, there was also something similar on Ethereum and a couple of other chains. So the idea was basically, we built this first DEX that is not running on the chain directly, but it's one layer higher. And it actually works in channels, and you have instant trades, because one of the main features of the Lightning Network and Raiden and Connect back then on Ethereum was that they have instant transactions. And this was technically very, very challenging, and surprise, it failed in the end, because, I guess we were about 7-8 years too early. But it got me into the basic primitive of atomic swaps, the very technology we're using now today at Boltz. And Boltz, as a fun fact, was actually the birth of Boltz was as a side project, like a little thing we started on the side in order to help OpenDEX, because fairly quickly we realized these channels are all, very fast and nice, but they have liquidity issues. So we need some helper on the side that helps users to manage liquidity. And that's actually how Boltz was born. And it's a thing that survived. And then in 2023, my co-founders and we took it on full time. And then here we are.
Nice. I have a lot of questions just with this opening segment. Number one, so I'm going to go, because a lot of people hear Lightning and this and that. So what is the Lightning Network?
Sure. So the Lightning Network is a layer 2 on top of Bitcoin. So it allows you to facilitate transactions that do not touch the Bitcoin blockchain, but it is anchored in the Bitcoin blockchain. And how it works in a simple, let me try to put it in 3, 4, 5 sentences. It's basically you and I, we decide to put Bitcoin into a common address. And this address then opens a Lightning channel between the two of us. And then you and I, we can freely exchange Bitcoin in a way that we could, at any moment, for example, I go offline or you go offline, or we don't want to continue anymore, we could anytime go back to the Bitcoin main chain. But we don't do so because exchanging within this channel is much cheaper and faster. So we actually want to keep our Bitcoins up there. And in addition, we are not only limited to this connection between the two of us. We can actually, I can also pay to another person that has a channel, for example, with you. So I can route through you, so to speak. And like this, basically, these single channels then comprise the real network. That's why it's called the Lightning Network, where you can route through other nodes on the network to the final destination. And that all completely in a trustless manner, where you do not ever have to trust your counterparty, neither your direct channel counterparty, nor anyone on the route. So it's a quite powerful, from a technological and trust standpoint, it's a quite powerful layer 2. Or it's actually Bitcoiners are pretty hard with definitions. They say it's only a layer 2 if it's completely trustless. You have to have all your unilateral access and all that. So the Lightning Network actually fulfills all of these. So it's pretty cool technology.
Okay, and then when it comes to OpenDEX, so what was the first iteration of the product? What was, because now we see all these DEXs. I think people are just used to seeing Hyperliquid, and that's the final product now. But how was it like way back?
So way back, the idea was to swap Bitcoin, and I think it's still the number one use case, to a stable coin, which mainly lived on Ethereum, right? So you had USDT, Tron was not that popular back then, so you had USDT on Ethereum and a couple of others. DAI was popular back then. So our idea of the use case that we wanted to build was for traders to be able to swap Bitcoin via a Lightning channel to a payment channel via Raiden, later on Connex. That's how it was called on Ethereum, and then buy USDT and the other way around. So that was the thing that we wanted to build. Basically, swing traders, any arbitrage kind of games. We wanted to enable these. The problem was, though, it was a very technological project. So it took us quite some time to pull off the, all the atomic swap, then get all the stack that you need to run in order to have this operating on your computer was pretty heavy. So we worked on the lightweight version of it, so there could be a nice desktop app. So it took us many years actually to get to the place where we wanted to be, and then started finally working on a UI, which we probably should have done from the very beginning. Like it was like a long journey to get the basics right. Yes.
And initially you started building, so coming back to like Boltz, which you maybe give everyone an understanding of what Boltz is now. And you said you built that as almost like a side project while being its OpenDEX.
Yes. So Boltz started as a side project to basically connect to the OpenDEX software stack that was running on your computer and manage the channels for you. Make sure you can always send and can always receive. So that is not a given with the Lightning Network or with any payment channel network. So
you facilitate the communication basically between 2 parties.
Yes, and we concretely what Boltz facilitated for OpenDEX was okay, I'm running out of liquidity in one part on one channel, so I'm replenishing it with, for example, Bitcoin on-chain funds. That's what Boltz was doing.
Okay.
And specifically, it was using also atomic swaps for that. So we already learned from basically what we were building with OpenDEX to use the same technology there, because why introduce trust if we don't have to, right? So we should leverage that very powerful technology.
What is atomic swaps? For those who don't know.
Atomic swaps is basically the standard nowadays. Any Uniswap, any AMM you can imagine is using atomic swaps. And it basically means a trade consists of two transactions, and they are cryptographically bound to each other. They're linked, right? So it means if I send something into a swap, it's guaranteed I get something back, or it's guaranteed if I don't get anything back, that basically the whole thing fails and I can get back my money. So it's all or nothing, 1 or 0. That's it. That's an atomic swap, and it leverages cryptography in order to pull that off. So what's special about Boltz is, and the big differentiator to Uniswap, to SushiSwap, and to all these AMMs that are integrated, for example, on Matcha and stuff, that it works cross-chain. So AMMs are inherently limited to that they run on the same network, on the same chain. Whereas with Boltz and OpenDEX, we wanted to basically do exactly that, to enable the same thing, but across chains, from Bitcoin to Ethereum. And Boltz wanted to do it from the Bitcoin main chain to the Lightning Network, which is also cross-layer, so to speak. Anyhow, so it started as this add-on that did atomic swaps from the Bitcoin main chain to Lightning and vice versa. That's it. And after OpenDEX failed, we continued operating it because in the meanwhile we had developed a very simple web interface, also learning from our experience from OpenDEX that we want to have something nice and user-friendly. And people continued using it, and it grew organically over the years without us really putting much work, like only maintenance mode, without putting much work into it. So in late 2022, we looked at it and said, okay, this thing is growing. There's demand there. We see potential. Maybe we should give it a real shot.
Just with Boltz. So basically
just Boltz.
The side product that you built was getting interest in it on its own.
Yes. Correct. 100% correct. Yes. And it was very simple. It was nothing fancy, it was Bitcoin Lightning. That's it. And it was not a lot of pairs to choose from. We experimented with Litecoin before. We directly had USDT on Boltz as well for some time. At least there was ETH for some time. But where we saw real success was surprisingly with Bitcoin to Lightning. So, okay, let's give this a shot. And then in 2023, we started building it out by saying, okay, we focus on Bitcoin layers only. So we want to be cross-layer, not cross-chain, not cross-asset. We stick with Bitcoin because we are a Bitcoin native company. And we want, our niche of the market is to facilitate atomic swaps between Bitcoin on-chain, Lightning, later on the Liquid network, and by now even Rootstock, which is a EVM sidechain, basically Ethereum technology, but using Bitcoin as a Bitcoin sidechain. So we have these 4 integrated now, and you can atomically swap across all of these in all directions. And it's pretty interesting and going pretty well because we do not only enable this via our website now, we also have an API. So that enables us to be integrated natively in mobile apps. So we have a couple of mobile wallets now that use Boltz under the hood without the users even knowing that they're doing anything with Boltz. So for example, users of the very famous, at least in the Bitcoin world, the Aqua wallet. So they scan a Lightning invoice and it automatically under the hood swaps from Liquid to Lightning. Or they receive Lightning, they say receive Lightning, and it shows an invoice. The invoice they are showing is actually Boltz invoice and swaps from Lightning back to their liquid wallet because everything they have in the wallet is actually Liquid. But the users don't even know that, and they don't need to know that. And that's the magic, really, that we are slowly seeing that is, developing. And
when did you start offering it as a? So when did you launch the APIs and offering it to third parties?
Yeah. So technically the API was always there. It was just not heavily used. So we always had the API there. So the website, the website that we built was using the public API under the hood, but that we really pushed, proper documentation. We have an SDK now. We have a couple of really powerful libraries that make it easy to use the API. That only in 2023. So before it was very rudimentary.
How's the team now? Like back in when you made the decision to actually focus on it, how large was the team and how is it now?
So we got together with 3 co-founders, and for the last 2 years, it was mainly us, three guys. And by summer this year, we'll be 5. So we are hiring currently, hired a new front-end developer already, who's starting full-time now, and hopefully by summer, another one. So we'll be 5. That's the target. It's also a little bit the idea of Boltz to be kind of effective with a very small team. So
I mean, there's so much you can do with, especially with these types of businesses, because ultimately you, for lack of a better word, you're a payment processing facilitator. So you don't need, you can do incredible volume with very lean teams. So you don't need to have hundreds of people. One thing I wanted to talk about today is decentralization. And so we can't talk decentralization without talking about KYC requirements, etc. I'm sure you saw the news with Coinbase a few days ago. What's, and you being fully, probably more Bitcoin than most of the audience here, it's always interesting to see that. I don't think many people on crypto Twitter actually own a lot of Bitcoin, more alts, which is fine. I'm curious to hear what you think about the where KYC has gone and where it's going from now with everything. So everything goes. What are your thoughts on KYC and decentralization?
Yeah. So we actually had KYC in mind from the get-go, right? So in a sense that we are aware that KYC will kill our business. If we ever have to KYC our users, we're dead. We knew that, right? So we are a Bitcoin bridge, and it has to work with a button click. If I need to upload my passport, the friction alone is enough for us to be basically, it's not viable anymore. So we focused very, very much on the technology under the hood to make sure it's 100% uncustodial. So that's really this red line we
Maybe
say,
define
okay,
what custodial, non-custodial means for people.
yeah, self-custodial is also, maybe it's the better word, is self-custodial. So that means that if you're swapping on a service, if you're trading somewhere, that actually the service that you're using never has custody over your funds. And we achieve that by using atomic swaps, because if you send, for example, Lightning Bitcoin into a Boltz swap, we guarantee, it's cryptographically guaranteed that you get Bitcoin on-chain back, or if not, that your Lightning payment bounces back out automatically. Right, so that's basically how we achieve from a technological perspective, how we achieve the self-custodial property, and that's something we had in mind from the very beginning, because for us this was always the red line where regulators, and we hoped, and I'll come to it in a second, because there was a phase of uncertainty and doubt, where the regulators will draw the line where KYC is necessary or not, or where you're being classified as a money transmitter in US terms or not. And we were very confident on that until the US government a couple of years ago decided to just, throw hands up in the air and say, oh, whatever now, like we just going after you. We don't care if you're not custodial service or not. And that's why we seriously took precautions, moved our servers out of any of the larger jurisdictions, actually said, okay, we have to basically wait and see now what's happening. We know it's wrong, and we hope it will blow over. But the US is the only jurisdiction. The DOJ is the only authority you should, as a global Bitcoin startup or crypto startup, you should be afraid of, because those are the only ones that have the power to actually get you no matter where you are. So we were like basically wait and see approach for a while, and now luckily it turns out that this non-custodial property actually has merit again, and it's actually relevant again for you to not be a money transmitter, to not be in under the MiCA rules in Europe, by the way. So this is not explicitly mentioned in the MiCA regulation, but also means you're not in, right? So that's basically this line. And back to decentralization, for us it really doesn't matter, right? So we actually a centralized service. We are Boltz, we are a company, it's a one server, it's one API. It's not this 15 nodes or Thorchain, like a little bit of nodes, and it's none of that. It's one server, one API, but it's non-custodial, and that's where we are really focusing on keeping the technical standard very, very high, and basically use this as our legal defense to ensure that we never have to apply KYC. And the second thing we did is also, when choosing our jurisdiction, we looked very carefully at these countries, and it was exactly back then at the time when the US was going a little bit rogue, if I may say so. We chose El Salvador in the end, because
interesting. Well, as the incorporation jurisdiction.
Yes, exactly. So we are incorporated in El Salvador now, simply because we felt, or we bet on that in future also we will be welcome there, and we are, right?
Have you been to El Salvador?
Oh, many times, yes.
Oh, wow. Nice. How is it? Side note, how is it on the ground?
On the ground, I mean, I've been first time 2021, was still a bit scary. There was a lot of military in the streets, and it was like, wow, okay, don't go out at night. And certain districts of San Salvador are definitely dangerous. You could hear gunshots sometimes. And then the next time I went in 2022, it was all gone. And it was people on the streets, and every time I go, the airport is nicer, new terminal now, new booths, and you can see.
You really had a massive impact on safety, security.
On safety, yes. You can see the development basically month by month. You can see that it's really getting better, and things are being developed, and things are being built. Regular people are opening businesses again. You can see the happiness, and that the locals have to suddenly have liberties back that they didn't have before. So it's very nice.
Okay, cool. So coming back to, so you said El Salvador, that's where the entity is based.
Yes.
And so
mainly because of this reason, that we felt like, okay, the El Salvador regulators probably won't go after us, because they actually want to attract businesses like us, right? So we pay our taxes there, we hire an accountant there, we we help. We travel there. We do go to conferences. And in the end, we are contributing to make the country grow. And it had a couple of perks, like that we also could pay our taxes directly in Bitcoin. Now it's not direct anymore, but it's still possible, which had the nice side effect that for us as a pure Bitcoin company, we actually could run completely on Bitcoin. And until today, we still don't have a bank account. And that's something I'm very proud of, that we are somehow managed to fight our way through this without opening a corporate bank account. So yeah, that's...
What's funny is we talk about this on the show a lot. Like I talk about the earned. So, in the media, you can buy press releases, media insertions, etc., or you can earn it, right? So the amount of the millions at this point, maybe hundreds of millions of dollars of earned media that countries like El Salvador, like Bhutan, have earned just through using Bitcoin as a strategy, as part of either a main strategy or one of the financial strategies that they employ. And again, to attract talent, to attract investments, to attract... when you travel, you book your hotels, you go to dinner, you meet people, you spend money. So it's I think people have a very narrow-minded thought process when it comes to they just do Bitcoin. It's like, no, this attracts talent, companies, investments, investors. I don't know if you have a family, but you can move your family there, your kids. It has a massive ripple effect on the economy.
100% residence programs, right? So they revamped it a couple of times. The agent that we used in the incorporation process in the beginning, because back then it was still very paper bureaucratic with a couple of chores on the ground that we couldn't always do ourselves. Their main business now is residencies, right? So mainly US, as far as I understood, the US citizens that are looking to get a second citizenship in the end. So they help them go through this. All these businesses that you don't necessarily think of in the first moment that are suddenly popping up and they're flourishing. It's powerful.
Nice, very cool. So what is the what's the vision for what you're building, like for Boltz specifically? Where do you want to take it?
Yeah. So our vision is.
By the way,
really
let me just cut you off. This is not a paid sponsorship. Boltz did not pay us. Our audience knows I'm an entrepreneur. I've been an entrepreneur for 20 years. I just enjoy talking with other entrepreneurs, investors, builders. So I'm genuinely curious about how you guys are building it, approaching the building, but also, is there an exit plan? Is there something down the line? So this is not a paid sponsorship in any way. I'm just genuinely curious. So coming back to the question, what's your take, your vision for everything?
Yeah. So it kind of, we stumbled really into it. So the vision is to be the non-custodial bridge between Bitcoin layers, right? So that's basically our positioning. And at first sight, and basically 2 years back, that was very narrow, because it's like, oh, there's 3 of them, it's like, well, that's a vision. But now actually an entire ecosystem of Bitcoin layers is developing, and a lot of layers are like roll-ups that previously only existed in the Ethereum ecosystem. A lot of projects that only existed in Polkadot and other spheres that Bitcoiners normally wouldn't touch are actually now coming onto Bitcoin, or back to Bitcoin, however you want to phrase it. And that's very powerful for Bitcoin itself, because it will enable so many new use cases. So I'm personally very excited about EVM-based rollups coming to Bitcoin, and I'm certain it's going to happen, because we're in touch with a couple that are in a very advanced state. We integrated Rootstock recently, which is already a very established EVM Bitcoin sidechain that has now Uniswap, SushiSwap deployed. Suddenly stablecoins get interesting. All that stuff that was always outside of Bitcoin is suddenly coming to Bitcoin, and that obviously serves our vision, because now the depth of the ecosystem that we can service, suddenly it's getting deeper. It's getting more and more and more and more. So we actually now we're having troubles keeping track of the different development stages of the different Bitcoin layers, right? So I have this huge list that I'm constantly updating. We have these a million Telegram groups with all the different teams and basically talking to them, because by now we positioned ourselves somehow. We are a little bit the go-to place if you want to have you know, a quick non-custodial easy swap between your layer and someone else. And so I think we're in a really good spot. And I see, you know, basically the land we're built on is growing. It has a lot of growth potential. So I don't really so far see the necessity to say, okay, now we also do something different, right? So I think, but let me add maybe one more thing. So that doesn't mean that we can't enable more use cases that are using our Bitcoin to Bitcoin between different layer swaps under the hood. For example, something I'm very interested in, again, after all these years, basically coming full circle after 7-8 years, is swapping to a stablecoin, to Tether, right? So Tether just broke 150 billion. It's stablecoins are probably here to stay. So I'm very interested in working with one of our partners on a solution to make it easy and quick, while still maintaining this self-custodial property to swap between Bitcoin and USDT. That doesn't sounds crazy, but it doesn't exist right now, right? So right now you have to have wrapped Bitcoin or TBDC or something like that in order to swap to USDT. Regular Bitcoin, Lightning, Liquid to USDT doesn't exist.
Right?
That's basically
interesting.
Yeah, so I know. So I think it's a very powerful primitive to be surfed by us in collaboration with a partner. So that's something we might be cooking right now. Because in the end it serves us. We'll be basically taking care that the Bitcoin swaps facilitate, the partner
the bridge,
and the partner takes care that the second part, basically to USDT, goes through, chain it all together, make it self-custodial. That's the idea.
Speaking of stable coins, curious to hear your thoughts. I don't know if you saw, but they just passed the Genius Act. Like, was it today or yesterday? I literally just talked about it before the show. And one of the use cases, I'd say one of the most bullish, not even narratives, but use cases really is stable coins, this cycle, with the banks, the funds coming in. Countries use stable coins, especially high inflation countries are using stable coins every day to just buy bread. So what's your view on stable coins in general? There's talk of dozens, if not hundreds, of stable coins in the US. I had a conversation recently about potentially states having each their own stable coin. So there's so much talk. What's your take on stable coins?
It's going to explode. 100%. How exactly? That's the difficult part to really predict that. Not even state level. We can already see city level. The city of Lugano. I'm European, so the city of Lugano in Switzerland has its own stablecoin, so to speak, in addition to Tether. And there is I can see basically. What I could envision is that a US dollar backed, probably Tether, maybe something else, stablecoin being like having a dominant market share and basically being this intra-country global settlement stablecoin. And then you have different local stablecoins tied to the Swiss franc, tied to whatever local currency you have. So I totally can see that. And the great thing is, from a technological perspective, there's no limit to it. There will be reserve-backed stablecoins, USDT bill backed stablecoins like Tether. There will be algorithmic stablecoins that are backed by Bitcoin or some other coin that are basically have the exact same value of $1 backing the stablecoin like this. They are not actually tied to a US dollar in the bank account. So there will be different sorts of stablecoin, but the only thing I'm sure of is it's going to explode, and central banks will have a hard time actually competing with this. And I found it a very smart move for the Trump administration to say, okay, we are actually not going to do our own CBDC. We are actively retreating from this game because, I mean, there might be other interests involved as well, but it was the smart move, right? Whereas in the European Union, unfortunately, we have a president in our central bank that announced the digital euro for the end of the year, and that'll be interesting. So I can only hope, and I will be a strong advocate against it, and I hope it will die off.
Yeah, I was going to ask you about what differences do you see between the way the EU is handling the stablecoin conversation and the US, and the differences, and how do you think that plays out in the next several years?
So like I said, the US, I think, is handling it in a smart way right now. To have, I mean, Tether has to comply with whatever requests they're getting from US authorities with regards to freezing funds. If it's proven to be used for some illegal activity, they got to follow whatever the US authorities are saying. That is fine. While it still gives this, it's still somehow not one as a permissionless, but much more open US dollar based system now suddenly accessible to anyone. I've been to Argentina and Buenos Aires, and people use Tether to, like I said, to buy bread. Maybe not every day, but at least it's being accepted in these cuevas where you exchange it for pesos and others. Like Tether is everywhere. And then in Europe, on the other hand, is going the exact the opposite route in trying to forbid and prevent stable coins that don't comply with any regulation they could come up with. And one of these, the regulation in the now enacted MiCA law is basically saying is you cannot be a stable coin in the European Union, or at least not serve European regulated exchanges if it's not a one-to-one dollar backing. Basically, one stable coin equals $1 in the bank account. If that's not the case, you cannot operate here. And that's stupid because it's limiting innovation. It's just kicking Europe off the, I don't know.
I'm European. I mean, they've been doing it for years. I'm Swiss, so they've been doing this for years, just stifling innovation across the board.
I cannot comprehend, really. For me, it's mind-boggling. So I'm not very hopeful that Europe as a continent will get its act together very soon. Eventually it will, because otherwise Europe will be crushed in that sense.
I agree.
But let me see if I can find a positive thing about stablecoins in Europe.
You know what's funny is, while you think I think that Europe, the EU, will be forced, even if they hate stablecoins, even though they've been extremely on and off with crypto in general. You have some jurisdictions that are very open. I mean, take Switzerland, not in the EU, but they have impact, like some sort of effect, a positive effect on a lot of big foundations are based in Switzerland, as you know. But I think that even if they don't want to take a pro-crypto, pro-stablecoin view, they will be forced into it and bullied into it by other countries like the US and many other countries who are pro stablecoin or pro crypto in general, just because there is too much money to lose if they keep stifling innovation. And we've seen that in Web 2 and tech. I mean, how many companies just literally left the EU and went to Singapore, went to the US? So I think I saw a tweet. I wish I could recall who tweeted this. Maybe you know about it. This was a few days ago. I believe it was last week, about at one of the events, and EU-based representatives of who are pro CBDC publicly. When the cameras are off, everyone is basically very vocal on, or let's say vocal on, when the cameras are on, being pro CBDC, and when the cameras are off, they know the CBDC is not the way, but they're too far gone in the CBDC space to come back and say stablecoin. So, they're
okay. That makes me a little bit more hopeful that there are actually smart people, or people that can read the board. But I hope especially, Switzerland is, I think, a great example for the EU. So if every fintech, Bitcoin, crypto, startup, unicorn in Europe is coming out of Switzerland or is moving into Switzerland and basically ditching the EU will have to react, right? And I hope this will be the case. Bitpanda was about to move out of Austria because they made their life so hard. I wish they'd done it because this would have hurt. I think it's the only unicorn that Austria ever had. They should have lost it, to be that hurt in order to be able to be forced to act and also sit in Brussels and say, guys, we just lost our unicorn. We got to do something. This has to happen in order for the EU to change.
I'll try to find that tweet if I can find it. It was I'm looking for keywords EU CBDC camera stage. It was a very interesting tweet. I mean, the crux of it is really like on camera, on stage, everyone's talking. It's all the suits, right? It's the Brussels crowd talking about CBDCs are good, but then when the cameras are off, it's like we're too far gone in the CBDC thing. It's been in the works for 2 years. There's no way we can pivot now. I mean, the public response would be very, again, they're politicians, right? So they have to think of the public
face. But why? Just admit that it was a stupid idea. I mean, what will happen anyways is like now that you launch it. I mean, I have so many technical concerns. So what's really missing about the euro, the CBDC of the digital euro, is how they want to pull that off from a technology perspective.
What concerns? Because you're in this deeper than most here, so.
They want to keep cash properties, right? So they want to keep amounts below 1,000 euro are supposed to be private. How you want to do this? I'd be very interested to see how you want to have that in your ledger that is probably running on your server somehow. How is that supposed to be private? How you're reading the amount? How do you know? It's like, I have a million questions. And in the end, they want to present us with a solution that magically I mean, I doubt even they found all the people that technically that I'd consider smart enough to solve all these issues. That never work for them, right? So I wonder whom they have to actually work on the tech behind all of this. So the tech's going to be a disaster. I know it.
I mean, I've seen this in Web 2 where, of course, the decision makers are never the builders and the users of the technology. And so what they do is they come up for 5 to 10 years with this new idea of what it needs to be. In the early 2000s, like in the late 2000s, early 2010s, it was the same thing with, ad tech, advertising technology, payment processing was really growing in London, for example, when London was still in the EU. And suddenly, I mean, have a look at how many UK-based companies have moved to Asia, moved to the US. Like, it's not normal behavior if entrepreneurs and builders like yourself consciously move out of the EU. It's a problem. It makes no sense that you should not be needing to move, especially on a continent that has major financial issues, an aging demographic, no innovation, and I agree.
But still the talent. So there's a lot of talent here, right? So
huge talent. Yeah.
The basics, the foundation is here in form of talent and people.
I agree.
People, very young people, technological people willing to build and to risk, but none of them, none in my circles ever, anyone that I know ever considered incorporating in the EU. One exception is a hardware business. It's basically they're selling a hammer and where you can put in your mnemonic with a hammer. That they were okay actually incorporating in Germany because it's a hammer and there's nothing controversial about it. But
I agree.
Yeah, saddening.
No. I mean, I agree. It's sad to see that this is kind of a side note to this show, but I mean, it is actually. I think everything is interconnected anyway. I do think they're shooting themselves in the foot yet again by pushing innovators outside of the EU, and there's amazing talent. But why? If you look at every country and continent as a product, right? Because they are products. They offer services. They offer. Look at El Salvador, right? The El Salvador product to you was appealing a few years ago when you decided to incorporate it, to do something. Compare that to the European product. The El Salvador product is more appealing. It's a better product for
it got better even
in crypto.
Right. So back when we were incorporating, it was all paper-based bureaucracy, and I was actually in touch with then they founded the Bitcoin office. We had a direct contact, a person to talk to on WhatsApp if I wanted to, right? It's a small country, yes, sure, but I was talking to.
There's a lot of small countries in Europe, and very few actually are proactive.
Could do that. Yes. And we get feedback about the incorporation process, and that like, hey, basically this needs to be electronical. Basically everything needs to be electronical, and do this, do that. And now 2 years later, it's there. There's a new entity type. It's all electronical. You don't need two founders anymore. That was a criticism. You can be one. You do it all online by yourself. Pay a small fee down. You have an Salvador SAS. That's the new entity type. Done.
Yeah.
So they are fast. They come up with new entity types that quickly, and
yeah, it's awesome. I mean, it attracts talent, money, innovation, and so no, that's it. I'm very bullish on those countries that recognize technology and just are willing to move faster than the older countries and continents.
Tether incorporated in El Salvador. I'm not sure if you're aware of that one. So Tether moved the headquarters to El Salvador.
No, I didn't know actually. Okay.
Yeah. So that was a very big win because that's not only good for El Salvador for reputation and probably tax revenue. That is great also for the money they spent on education on the ground. So they bought a couple of buildings that they will dedicate towards Bitcoin education, right? So Mi Primer Bitcoin, like the educational programs for primary schools, all that now is suddenly funded by private money. So great deal.
Of course. I mean, it creates jobs. It's I think that again, it's such an easy win for these smaller countries. I'm surprised. I know that many other small countries are looking into this and actually moving. Some of them are in the news, some of them are just like conversations you have at events in person, but it's a no-brainer plus move. No-brainer. It's the Bitcoin and the crypto community at large will welcome new countries, will advertise and promote them. It's free media exposure. It's residency, like we talked about. It's restaurants, it's hotels, it's tourism. Just by adopting or making it more crypto and Bitcoin friendly, it's a huge win. I'm amazed that more countries, especially those that don't have, and many of these small countries don't manufacture much. It's a no-brainer win for many of these. I hope we see more of those.
Yeah, all these islands. I guess a lot of countries are basically work with a wait and see approach. Yeah. Maybe they also need an administration change in order to have someone young and energetic and willingness to risk something. They probably also saw the IMF backlash that El Salvador had to deal with in order to get a loan from the IMF. They were probably all watching this and say, okay, but somehow they managed, right? So
they did it. Yeah,
it was a net positive. So
yeah, absolutely. All right. We have a few minutes left. I'm curious to hear. So 2 things. Is there anything you'd like to, and we'll link all your resources, links to anything you want to send us. Is there anything that you want to, that you're interested in the market? Anything you want to plug or mention or that you're looking at in the market today?
Okay, I'm obviously very biased and I'm like in my niche, in my own little world here. But I'm very excited about a couple of upcoming Bitcoin layers that most of Bitcoiners don't have heard about, let alone probably the wider crypto ecosystem has no idea about, never heard about that. So I'm very excited about a layer called Ark that is in development right now. We're working with one of the teams that is working on Ark implementation, and it's very, very powerful. Yep. Then we have a US company called Lightspark. David Marcus, CEO, might be a name. They are also working on a layer 2 called Spark. Finally, very similar. That is very productized. So I was impressed when I saw, you open a web page, it's like, okay, that's looking very good. The docs, very, very well done.
Was
very
he
polished.
At Facebook?
Yes.
Yeah. Okay. I remember. Yeah. He was working on, was it Libra?
It was, the Libra project.
Many names. Yeah. I remember. Yeah.
DM later. Yeah.
Yep.
Yes.
Got
Exactly.
it. Okay.
Um,
So you're
so
coming
he's
back. So what stage is that at?
so that is in a stage where it's live on mainnet now. You can use it, and there's all the open source in the code. So it's basically right now is where you can start experimenting with it. But again, it's very polished, which I didn't expect at all. I was like, okay, I read through the idea like a couple of months back, or not the idea, basically the technical concept, and was like, sounds interesting, could work, but I didn't expect like within the time frame of 6 months to have like a product version of this on the market. Usually these time horizons are much longer, like you have to, like with OpenDEX, we spent years on developing the protocol itself. So that's super cool. I'm excited about a technology called BitVM. So that's basically bringing like EVM to Bitcoin. But that's not the exciting part. The exciting part is that it enables rollups to come to Bitcoin, EVM-based rollups. And that I find super interesting, because it enables new use cases, right? So it enables things that were not possible with Bitcoin before, full stop. You can do things in an EVM. You can have financial products like an algorithmic stablecoin backed by Bitcoin, US dollar stablecoin backed by Bitcoin, only with an EVM. That's the only way you can program this entire thing. All the MakerDAOs, all the AVEs, all the AMMs. That's only possible with an EVM. So I'm very excited about so the pure Bitcoin ethos people. They're always a little bit opposed to this kind of stuff, but I think that's the wrong approach. It's a powerful technology in the end, and that's what we should be excited about. And that it really, I see this vision of Bitcoin becoming the new financial layer, not only the money, but also basically housing the entire financial layer, which was not that clear before. So it's basically you have Bitcoin, the money, but all the fun fintech, interesting lending, trading, MEV stuff is happening somewhere else. I was like, no, it's coming now to Bitcoin. It is coming to Bitcoin, and that's something I'm so unbelievably excited about.
Yeah, very cool. Last question for you. This is a question I ask every guest, because everyone watching the show loves to know your prediction, the guest's prediction on this cycle, Bitcoin.
Oh no!
Number go up, number go down. You have to answer this question. What's your view on this cycle, and why?
Okay, this is really not my strength. Okay, I shouldn't come up with an excuse. I should just give you a number, I guess, right?
Just give a number. You're good. You're off the hook. We just need a number. Otherwise, I get DM'd like, why didn't you ask the question?
Okay. 150K Bitcoin USD. That's the cycle.
What
I don't think we'll go much higher than that. Yes.
Interesting. I was going to ask you, why do you think 150 only? Let's say, quote, only 150 and not, I've heard 400K or 500K this cycle.
Because I think the concept of cycles, that as we used to know it, is kind of a little bit over. So when you ask me about this cycle, we are talking probably this summer, like we're talking the next 2-3 months. But I'm fairly sure there will be another cycle by November again, as it used to be. So that's why I think like we probably reach 150 at some point, and then take a break, a couple of flat, maybe even we'll go down for a little bit. But I just think the concept of the 4-year cycle is over. That's
I agree with that. It's I think people like the idea of the 4-year cycle, but the and we'll close off with this. I'm curious to hear your thoughts too. Everyone says that this time is not different because it's been like this forever, and it is different. I mean, you've never had BlackRock and $1 trillion funds looking at this asset class. Never. It has not happened. You've never seen US presidents openly bullish on the asset class. It has never happened. So it is fundamentally different in the type of holder and buyer. It is different. And so this is the first time that it actually is different. This is not 2021. And I agree with you. I think the 4-year cycle was nice, but just because the buyer type is different, it will change the fabric of the cycle theory. What are your thoughts?
Yeah, the continuous demand that basically is there from the market, not only from the BlackRocks, but also from the strategies and
strategies.
the 21. What's the new of Jack Mallers? Basically, their new. Forgot the name of the new company.
I forget the name. It's
21. Just 21? No, 21. I think it's just 21. Yeah, he's the CEO now. Yeah. So it's also backed by Tether.
Yeah.
A couple more. So there are these new company types that basically just have one goal: acquire Bitcoin, and they will just establish this baseline demand that will always be there. Something that, like I said, didn't exist before.
I agree with you. I agree. It is a fundamentally different situation than 5 or 10 years ago. Kilian, it was a pleasure to have you on. We will link all your resources around. Thank you for being on, everyone. And again, check out Boltz. This is not a paid endorsement. We just like to vibe with founders, entrepreneurs, and people who are actually doing and building things in the space. Thank you for coming on the show. Thank you for watching, everyone, and we will talk to you next time.
Thank you for having me.
Hey, thanks for watching. If you got value from this episode, you're going to love what's coming next. So subscribe now. We drop new episodes and videos several times a week featuring power players, market movers, and insiders from the financial world. And if you want access to deals and insights we only share privately, hit the links in the description and we'll see you on the next show.